Okay, Peter, what is Hanover proposing to debenture holders?
We're proposing that we'll repay them over a period of 5 years, over the first sort of 8%, 10%, 12% over the first 3 years, and then 35% in each of the last 2 years. To support that, we've got the shareholders prepared to put another $96 million, up to another $96 million into the business to ensure that those payments get made.
Why isn't receivership a better option?
I think that extra support from the shareholders is a prime example of that, is a prime contributor to that. I think the other thing is that we clearly believe that in a receivership situation, a lot of the borrowers out there are going to look to do better deals, if you like, on getting money back to us. I think given that we've got control of the business and got control of those loans, we've got an ability to make sure that borrowers do work with us to get as much money back as we can.
Will you be handing all the money back from borrowers directly to shareholders or to the debenture holders, or are you planning to lend out some of that?
Within United Finance, it's primarily a get the money back as quickly as possible scenario. In Hanover Finance, which is the bigger company, there is an agreement with the trustees that we can continue to lend. We believe that's an important part of helping us achieve the 100 cents in the dollar. We currently are modelling very little lending, and we're not able to lend or won't lend without having quarantined first the next 2 quarters of payments to debenture holders. So there is limited lending going forward, but a capability to do so.
What's the scenario if the property market worsens further from here?
Well, it's a tough old world out there for everybody, really, and we're if the property market worsens, then we just work our way through it. Our obligation under this proposal is to deliver payments to debenture holders, and we're clearly setting out to achieve that. Some people might ask, why isn't it more earlier? And really the 8 cents or the 8% in year 1, the 10% in year 2, the 12% in year 3 is geared towards what we believe we can achieve in cash flows over those years. So if it gets substantially worse, well, everyone's going to have to deal with that, and we'll revisit things. But we believe that we can meet those first 3 years' payments, given current conditions and possibly even conditions slightly worse than we might be seeing today.
You're proposing a capital repayment. What about the interest payments?
Interest is we're not proposing to pay interest through the period of the 5 years. We're asking debenture holders to forego that as part of this transaction. What we have done, though, is we do recognise that the market and our returns could be substantially better than we're expecting over that period of 5 years. And so if that is the case at the end of, we've recovered all the money, we've recovered all the funds, if we achieve a certain level, then what we will do is we'll calculate interest and make payments based on that.
Is there a chance that shareholders could be paid dividends before debenture holders get paid interest?
No.
So all of the interest would be repaid before dividends start being paid?
If interest kicks in under the calculation or under the process that we've got, that will be paid before anything is paid to shareholders.
Thank you.